So cooperating here, is market sentiment not, or is market sentiment going to shift to the positive again?
Good morning. Well, barring external factors, which we've seen a lot of, right, throughout the last year, whether it's been geopolitics, whether it's been tariffs or things like this, if we're on pace here for kind of the trend that we have here, and we do have this growth of AI, I know there's news around spending being cut back and things like this, but we're still in the infancy of AI, and there has already been so much spending that is now going to kind of pile into the economy, pile into these different companies, different sectors and things like this. So I think it plays out and benefits these companies over time. So I think, that coupled with a Fed that is likely to cut, particularly if we have a new Fed chair in with the president and kind of, knowing where the predictions will go on that. That's what the market's really looking for, right? We have a little bit of a weaker labor number. Consumer spending is holding up. Corporate earnings were arguably great. You had over 80% of names beating on the top and bottom line. Double-digit growth continues, positive GDP outlook. I think that we could be in for a good market here.
A good market led by the same names. It's interesting that Nvidia CEO Jensen Huang is in Capitol Hill today. We understand he's just been seen entering US House Speaker Mike Johnson's office. How much will political tailwinds or headwinds help or hinder some of these companies? Been worried about access to China. More broadly, can Nvidia continue to lead this market higher?
So I think in a way, Nvidia still has the monopoly on AI and chips, right? And so I think that, a lot of the other semiconductor companies are starting to do, better and take some of the business away. But for now, Nvidia remains the clear leader. In terms of Washington and politics, of course, all of these things impact these companies. They are the trillion-dollar clubs. They lead the market, and policy affects them first. But the other side of that argument is when the market falls back, where do people invest? A lot of times they look for defensive names, but you have these again, trillion-dollar companies, high quality, strong balance sheets that over time tend to perform. Investors actually do look to those companies for investments. And if you look at today, 400 out of the 500 names actually participated in the bounce off of, the last pullback. And so you see a little breadth expansion there. I do, though, think that the AI tech is going to continue leading markets for years to come.
You've actually got a large cap ETF that is excluding Magnificent Seven. How has that performed of late, and how many people are wanting to put money into it?
So interestingly enough, we've actually seen an increase in flows into that ETF. And, it may sound like a contradiction what I just said. It absolutely isn't. I think that the average investor has exposure to Mag 7 everywhere, right? Whether it's in ETFs or they hold the single name stocks. And so when the market pulls back and you're looking to diversify and broaden your exposure, we take out those names because we're saying, hey, you already have them, hang on to them, but participate in the breadth and the broadening of the rallies in the years to come. And so, very much like an equal weight strategy, XMAG excludes the Mag 7, but what's we think very favorable about that is you're still letting the winners win, right? So you still have market caps rallying in that fund and can do well over time.
You really have created a lot of ETFs that have been galvanized by this whole broadening out of the trade, AI and power infrastructure ETF, for example.
Yes.
But I'm also interested in the quantum side of things, because there's an interesting story. Key Nobel laureate, winner of the physics prize, has just been talking about how China looks like it's really pulling ahead, just a nanosecond behind the US in terms of quantum compute, scale, and indeed innovation. How much have people been wanting to get into the quantum side of the equation?
Well, I think, what you just mentioned will be a big reason, and we'll put a lot of focus on the quantum names again for investors, because what happens when we think that, other governments are beating us in AI or technology or things like this, the US government tends to invest, right? And American corporations tend to invest and catch up and try to win the race, right? So I think that just, on a basic level, you've seen some good news around quantum, whether it's been HSBC, the advanced bond pricing models that have come out of it. You've seen some good results around annealing from D-Wave. Some of the top quantum companies have done quite well for investors. But I think, as this continues and it becomes more commercial, you will see flows coming into the space. And we think it's a longer term hold for investors.
What hasn't been a longer term hold just in recent days has been MicroStrategy. You have a lot of ETFs giving either you long exposure to MicroStrategy, now called Strategy, or indeed leverage positioning for it, but also to go short as well. So you're kind of offering both sides of the pile here. What do you make of the fact that maybe Michael Saylor isn't a complete hodler for the longer term, that maybe at some point they might have to sell Bitcoin?
Yeah, I mean, I think that that's a business decision for their firm in terms of how best to generate ROI and be profitable over time. But what you just mentioned, it is true. We have long funds, we have short funds, and for us, we're just trying to democratize hedge fund like products for investors that are tactical and knowledgeable about these markets and look for short-term exposure opportunities. So those products are simply there. We don't necessarily have an opinion on, their view of that. We want to give them the right tool to do that. But I think, if Bitcoin rallies, you'll see strategy do well. If it doesn't, you'll see it go the other way. And perhaps the flows will also match in terms of long and short leverage funds.